Hello and welcome to a very special interview series by ETBFSI.com. As India's housing market experiences a dynamic shift driven by rising urbanization, digital disruption, and changing consumer expectations, in this episode, we are thrilled to be joined by Girish Kousgi, MD and CEO at PNB Housing Finance, who is playing a pivotal role in shaping this transformation. In this discussion, we'll be delving into the housing finance sector's current trends, challenges, and opportunities in lending landscape, and what the future holds for both the company as well as the industry. Hello, sir, and welcome to the show. So, to begin the conversation, first thing first that I would like to understand from you is that recently we have finished the financial year 2025. Would you like to share some highlights of how the PNB Housing Finance performed for this financial year, and what was your takeaways for the industries in general?
Sure. I think if you look at PNB Housing in last 3 years, we've been working on transforming the company. And I think FY25 was the year where we had ticked all the boxes in terms of transformation. FY25 was a great year. If we talk about growth, we are back to growth on retail. Retail book growth was 18.2% against guidance of 17%. And if you look at asset quality, it used to be about 8.13% in March 22. It is down to 1.08 in March 25. Very good growth on disbursements, over 25%. Margins were stable. PAD grew by over 25%. I think overall it was a great performance. We started affordable business in Jan 2023. And by March 2025, it's about 2.5 years. We have built a book of over 5,000 crores on the affordable side. Overall loan book is 75,000 crores and AM is 80,000 crores. So I think a lot of key milestones achieved in FY25 on all counts.
Great. Sir, can you shed some more light towards your current loan book composition, and how do you ensure a balanced approach between growth and asset quality while maintaining this growth story?
See, for us, it's always asset quality first, because in this business, it is basically a leverage business. And therefore, asset quality is very, very important. And which is why our focus was to try and work on asset quality. And that is why we have reached to a position of 1.08%. We always look at moderate growth, not pretty aggressive on growth. We look at moderate growth. Industry is growing at about 13 to 14%. So we have grown by over 18% in FY25. And in next couple of years, we might get to 19-20% on retail book growth. I think that's how we look at growth. If we talk about the entire book, we have a large book on prime. So we are into basically 3 segments out of 4 segments. The 4 segments are super prime, where we are not present. Second is prime. We have a large book in prime. The third is emerging. It is a fairly, it is an old business, but we started a new vertical last year. And we are into affordable business. Out of 75,000 crore, affordable is about 5,000 plus crore. That's the book size. Emerging is about 14,000 and odd, and the balance is prime. So this is the composition. In terms of salaried and self-employed, which is the profile mix. So it's about 65 and 35. In terms of product mix, home is about almost 70% and non-home is 30%. So there is a fine balance between growth and asset quality, which is very much required in this industry. As I mentioned to you, our focus is on asset quality. We have all the risk metrics in place to ensure that the origination, credit buying, and the processing is intact to ensure that the quality of portfolio always behaves well.
Great to know the numbers, sir. But recently we have seen the reports have said that there is around 35% drop in terms of new home loan borrowers in the last fiscal. But the average mortgage has increased. This is what the reports have said. So how much do you go with these numbers, and how the PNB Housing Finance has been managing these hiccups that are coming in the industry?
I think if you look at the industry growth rate, even for FY25, it's going to be around 13 odd percent. So it is in line with the industry. It is in line with the industry growth rates if you compare it previous 2 or 3 years. If you look at most of the housing finance companies, they have grown pretty decently. Results are very good. There is growth in disbursement. There is growth in book. If you talk about PNB housing, we had the best ever year in last few years. That was FY25, right? Yes, I don't know which report you're referring to. In certain markets, definitely the sales has come down. But I think if you look at the demand, whether it is in any of the four segments what I mentioned, demand is quite robust. We have not seen any slowdown in FY25. Rather, there was a lot of focus and increase in demand on emerging and affordable. So that is where we see a lot of scope going forward as well.
Sir, would you like to shed some lights on the green finance sector and the ESG principles that PNB Housing Finance is bringing into the picture while its operations?
So for us, ESG is it's a strategically very focused area. So we are now disclosing all the indicators as per BSRS as per the SEBI format. So we are now disclosing. So we've gone to that stage, and we're also pretty active in terms of participation in various global ESG frameworks. So on green housing, since there is no history on the asset quality and the reporting format, so I think there's a new guideline launched recently. We are still working on that. I think we'll be up there very soon. So for us, ESG is very, very focused area, and we have dedicated teams for ESG and sustainability.
Sir, we have observed that in the last 3 years, the PNB Housing Finance has, recorded around 3x growth in the continuation. So, how the company has maintained this continuous growth, and what are your plans in the coming future to sustain the growth at this pace?
So in last 3 years, we have done a lot of strategic changes. Predominantly, we were earlier focusing on super prime and prime, which means lower margins. So being a HFC, we thought we need to slightly move towards segments which can give us better yield and better profitability. And that is why we started affordable business 2.5 years back. And now we've built a book of over 5,000 crores. We started emerging vertical last year, which also comes at a higher yield compared to prime. So that is doing pretty well now. And this year, FY26, we have launched a new vertical called loan against property that again will come at a higher yield. So if you see in last 3 years, there has been a shift from no growth to growth. There has been a shift in terms of getting the portfolio better, both on legacy and origination. And if you see, we are trending more towards profitable business. Talking about growth, as I mentioned to you, industry is growing at about 13 to 14%, and we would be in the range of 18 to 20%. I think it's a decent enough growth in this industry. So going forward, PNB Housing will be focusing more on affordable, more on emerging, and keep reducing focus on prime. To a certain extent, because prime business comes at a lower yield, because a lot of banks have play in the prime and super prime segment, and all the HFCs, especially affordable housing finance companies, they have play on the lower income and EWS category. So our focus is there. So we would focus on affordable and emerging to a large extent, and to a small extent on prime. This would ensure that we will be able to grow, we'll be able to improve the profitability. And given our focus on asset quality, given the backdrop of very strong collection architecture, we'll be able to have a fine balance between growth and portfolio quality. And in terms of positioning, PNB Housing would be known for focusing more and catering to segments like EWS, LIG, and MIG, which typically is affordable and emerging as a segment. To a small extent, we would still do prime business. Book is large. The book would, over a period of time, degrow, and we would reach a stage where we would have emerging and affordable more than 50% of the portfolio.
So now coming back to some of the numbers. So would you like to share that what is your current capital adequacy position, and how are you ensuring the long-term funding stability?
So we are pretty much comfortable. So we are at about 29% CRAR, and for next 3.5 to 4 years, we don't need capital. We are well capitalized, and this is for growth. So it is growth capital. So we would try to grow our book, depending on the market situation. As of now, the growth looks like 18 to 20%, especially on the retail segment. So we don't need capital for next 3.5 to 4 years.
So any plan for expansion or in terms of digital transformation for which you might be planning in the future to take some funds or some other avenues?
No, we don't have plan to raise capital, but depending, we need to raise funds from banking channels, from market, from NHP. We also have a deposit franchise. Our book is about 17,000 crores. So we have various sources to manage our liabilities. So we would do that on a constant basis. But when it comes to capital raise, we are very comfortable, at least for next 3.5 to 4 years time.
Great. Thank you so much for sharing the insights. Now coming to some industry specific developments that are happening. Sir, I would like to understand from you that how you are managing the evolving regulatory and industry landscape in the housing finance sector.
So we are in upper layer. So I think we have been pretty much into the regulatory framework in terms of the regulation applicable for upper layer. So we are in line with the regulation, with all the updates and all the changes, what is required, from a business side, risk side, IT side. I think we're all pretty much in there. Since we are in upper layer, I think we are already there, and we were doing certain things even before these guidelines came in. So it was a lot easier for us to adapt and be in compliance with all the regulatory frameworks.
Sir, what is your vision in terms of the overall real estate sector in the coming 5 to 10 years? How do you see the market flourishing, and what opportunity that it holds for the housing finance sector and specifically the affordable housing?
So if you look at real estate sector, long term it is very good. So it is a cycle of about 7 to 8 years time, right? So industry will do well, and this is a cycle. So whenever the cycle changes, there might be a bit of consolidation, and again it will start, because real estate, I think by default, would appreciate, right? Land would appreciate, and the construction value would depreciate. But overall, even if it's an apartment, let's say it's not an independent house, the property price would always appreciate. I think long term it is very good. Even in the short term, it is very good. At least for next 3 to 4 years time, we see this industry doing pretty well in terms of price. It follows the cycle. There'll be ups and downs, but I think it will be more consistent. I think real estate as an asset class is more stable long term, and most of the consumers would want to own a home, and majority of them, at least the focus where we have, it is for self occupation, and it is not as an investment, and therefore they're emotionally connected. So the end use is going to be for self use, and therefore property prices really doesn't matter to the segments to which we cater to. But having said that, it is a cycle. Prices would be stable. There will be ups and downs whenever the cycle changes, but I think that's been there for last so many decades. This industry is very stable. Real estate sector will be stable. Housing industry will do well for next 4 to 5 decades, given the focus of government, especially on affordable and emerging. They have come out with the PMAY 2.0 inter-subsidy scheme. So under that scheme, close to 1 crore beneficiaries would be eligible for loan under the subsidy scheme. So all of these things will only ensure that the demand goes up and there is more and more interest in this sector.
The government has a vision of housing for all. So from your expert view, I would like to understand that where do we stand at this point of time in terms of housing for all, and what needs to be done in the coming future to achieve this goal?
If you look at the mortgage penetration in India, it's quite low compared to some of the other Western countries. It's very low, which means we have huge potential. I think government is doing everything what is possible to ensure that housing for all, that dream comes true. And with government, all the housing finance companies, including PNB Housing, we are participating in this growth journey. Long way to go, much to cover, but yes, definitely we are on the right track. And hopefully, I think next 15-20 years time would be in a far better position in terms of providing housing for all.
Well, so now I would like to bring one very important aspect, I think, without which any conversation is incomplete these days, which is artificial intelligence and these innovative tools. Because in every sector we are talking about the AI and the new tools coming into the picture. So how do you see that these tools are going to transform the housing finance sector? Because regulator and government has also been active in terms of digitalization, bringing more and more records and everything in the digital space. So how do you see this can be done, considering the audiences are vast and that there is still a utter need of digital literacy in many parts of the country? So how do you see these things flourishing?
See, we have adopted digital as a focus area for the company, and we are seeing a lot of benefits through digital transformation. We are through that journey. AI is a big part. I think definitely it's going to help for us to serve customers better, faster. It will help the organization to reorient and look at growth on all the aspects. So this is definitely going to help all the industries, especially mortgage. In next few years, we started adopting. We are looking at various options like any other company in this industry. So definitely it will help us to serve customer better. We'll be able to deliver our services in a much efficient way and at a lower cost. So I think this is what would happen in next few years by use of AI.
Well, thank you so much, sir, for giving your valuable time and answering all the questions. And I think it is going to be very meaningful for our viewers as well. Thank you so much, sir, for your time.